Thanks for tuning into Stocks with Antonio. What a day in the market. So, I'm making this video March 31st, the last day of the month, and we had a pretty green day Tuesday. I'm sure a lot of you are probably excited to see some green in your portfolio to see a green day since we've been having so much red lately. A lot of us forgot the side of green. But we got some green candles, we got the stocks moving up, and that was nice to see. But I do want to bring to your attention that was just on news that the war may be coming into the to an end, that things may be getting wrapped up, that an agreement might be reached, but there's no confirmation on anything. Meaning that even though we had a green day on March 31st, that doesn't mean April 1st, tomorrow, Wednesday, we're going to continue to have a green day. We'll have to see more news develop, see what comes out. Now, the president is speaking, I believe, at 9 in the morning, and we'll see what happens, because when he speaks, it's going to really impact the stock market. Either it's going to go up or it's going to go down, depending on what he says. So you want to stay tuned, especially if you're going to go into the stock market. If you're someone that does options and you're going to try to make some money, you definitely want to see what he says before doing anything. Now, when it comes to investing, I do think this pullback is a great opportunity. Now, some individuals may think this is not a good time. They're waiting on the sidelines just to see what happens with the war because they don't want to catch a falling knife. Now, is that a concern for me? No. If you're investing long term and you have a long time frame out, I think this is a great opportunity to start putting money in and not really worry about timing the market. Especially the majority of us, I think no one can really time the market, right? But especially the majority of retail investors can't. You're busy with your 9 to 5 or your business, your family, your day to day to really be knowing, oh, when's the best time to get in? I think when you see pullbacks, the best thing to do is set up a system where you're investing regularly into the market, into your favorite stocks, right? Into good companies. And so if you're investing in good assets and good ETFs and there's pullbacks and you have a long time frame from when you're going to need the money, all these are opportunities because some of these companies that you see today's prices, they're not going to be the prices 5 years from now. 5 years from now, it's likely that they're going to be a lot higher if they're good companies. So you want to take advantage. The biggest thing to building up a portfolio and to building wealth is actually putting money in it. The biggest reason a lot of people can't build up a strong retirement account, can't build up a portfolio, they find too many reasons to not invest. They don't try to find ways to put money in their portfolios on a regular basis. And let's face it, what you need is to put money into your portfolio, invest in good companies, and you need time. So, what I like to try to do is every time I get paid, some of you get paid weekly, some might be bi-weekly, some may be monthly, but however you get paid, try to find some money that you could take out and put into your portfolio and invest on a regular basis for long term. Now, some of you may say, I don't have a lot of money right now. Even if it's just $5 a week, even if it's whatever you can. And what you do is you make a goal for yourself. If it's $5 a week, if that's all you could do, you start with $5 and you try to find a way how to increase it to $10. Because everyone watching this video is going to be in a different financial situation. Some people may say, all I could do is $5. Some people may say, I can't do anything, right? And then you really got to try to find a side hustle. Maybe it's door dashing, Uber Eats, or something else where you can get some extra money to start building up your portfolio. And some of you may be able to do $100, $1,000 or more, right? Because everyone's going to be in a different situation. But it's getting that discipline to constantly be investing on a regular basis. Now, you may be wondering, well, what do I invest in? ETF, it's always great. You invest in a good ETF that tracks the S&P 500, pretty much just invest on a regular basis. You can forget about it, especially if you have a long term on your side because you're younger, right? Or the Max 7. Those are some great, the Max 7, great companies to invest in, great assets. And right now they're at a discount. Now, could they come down lower? Absolutely. But again, if you're investing, you're not planning to touch that money 10 years from now or longer. You don't need to worry if the market's going to go lower. You should need to worry to continue to invest. If the market goes lower and you're investing in a weekly basis or a monthly basis, guess what? You're going to DCA into good companies, and over time, you're going to see your wealth build. And the reason I'm making this video, because some people are like, man, you're talking about buying and the market's pulling back and it might go further back. And a lot of people saying that they're just not investing a lot of times on a regular basis. They'll buy when the market's running straight up and they're slow-mo, and then they find themselves a lot of times probably looking at their portfolio and seeing themselves bag holding because they're only buying when everything is good. They don't want to buy when things are bad. Buying when things are not favorable and the market's pulling back, guess what? You're getting good companies at a discount. And if you got if you're not planning to touch the money for a long time, you should be fine. Now, that's my opinion. Anything I say is not a suggestion for you to buy or hold or sell, but I'm sharing with you what I believe and what I'm doing right now. I'm continuing to DCA into my ETFs. If you need some ETFs, check out VUG. Check out VOO. Those are great ETFs. Some of the Max 7 I'm doing is one of my favorites, Amazon. Meta. Meta not too long ago was at 525, and we just got some good news. And look at how much it's gone up. At March 31st, I think it's at about $570. If you were buying, you would have got some of that upside if you were buying as it was pulling back. If we get positive news tomorrow from the president, this stock market's going to run up. As you saw how much it ran up today, right? That means investors are sitting on the sidelines ready to invest. They want this war over. They want some good news, and they want to find a reason to put their money to work. You got people ready to put money to work in the market. The market ran this much with no confirmation of anything. Imagine if we get some positive news that the war actually is coming to an end. We get confirmation of that. We start seeing oil prices go down. We start getting positive news as the months go by. This stock market will turn around and will go to new highs and we'll have a bull run. Now, I can't guarantee that's going to happen, but if that does happen, who's going to benefit off of that? The individuals that were buying as the market pulled back and were being patient. So basically, the point of this video is as the market's pulling back, if you have time on your side, meaning you don't need the money tomorrow, you don't need it next month, you can put money away into the market and leave it there for a few years. I believe in this is a buying opportunity. Now, if you're looking to make money in the short term, because I still try and make money in the stock market in the short term, I scalp trade, meaning I try to get into a position, either a put or a call, and I try to get in and out within an hour, within the day, extremely quickly. That's why it's scalp trading. I'm get in and out, right? But I only do that on days that I can sit in front of the computer, look at the charts, and if I do a put, that means I believe the market's going down. And if I do a call, that means I believe it's going up. But those are options. Those are very risky. A lot of you that are watching this may not know about options, may have never done it, but you can actually make money when the market goes down by doing options. But that is something very risky. I would suggest if that's something that catches your interest, definitely check out the description box. I got some links there so you can start learning the candlestick patterns, but you want to do some research before you jump into doing options, maybe some paper trading, start watching videos on options and stuff, get some basis on it before you jump in. But again, I'm not recommending anybody to do that. Everything I'm saying is just me just sharing my opinion of what I think of the market and what I'm doing. If you found the video to be helpful, smash the like button. If you haven't done so, go ahead and subscribe to the channel. Help out a small channel like mine. I really do appreciate it if you do that. But right now, I'm just continuing to dollar cost average into my favorite ETFs, continuing to increase my share count into some of the Mag 7. And Amazon's an amazing one. Meta's another good one. You don't want to miss those opportunities, in my opinion, and that's what I'm doing. Hopefully you enjoyed the video. Smash the like button. Don't forget to subscribe, and I'll see you on the next one, and let's see what happens tomorrow in the market.